What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Got a question for you. Do you pay federal income taxes? Well, if you do, apparently you are in the minority of Americans. Because according to the latest report from the American Tax Policy Center, the majority of American households paid zero federal income taxes in 2020. So, is this accurate? How can this possibly be? Does the federal government really support its trillions of dollars worth of spending from just a small percentage of all of Americans? Well, yes, but there's a catch. Because while there are an unlucky few who get stuck with the actual tax bill, that is a distraction really from the main burden that is being placed on Americans. Ready? Let's dive in. 2020 was an abnormal year to say the very least, and for more than just one reason. And one of those reasons was the number of people who paid nothing in taxes. You see, for normal years in the past 5 years or so, the average number of households that end up not paying taxes is around 75 million households. About 75 million pay no taxes. And that comes out to approximately 43%. But due to lower taxes broadly because of dropped incomes, tax-free stimulus payments, additional tax credits, and things like that, 2020 was different, and it went from about 75 million households that paid nothing in taxes all the way to up to almost 107 million households that paid nothing in taxes. Percentage-wise, that went from 43% of Americans paying nothing in federal income taxes all the way to 61% of all Americans paid nothing in federal income taxes during 2020. So, who are these lucky people that got to pay nothing in taxes? There's two groups: the poor and the rich. By now, it is a well-known fact that the middle class is the one who gets the brunt of the punishment by Uncle Sam. This is because both the poor and the rich both have their own forms of welfare from the government. For the poor, it's because oftentimes their income doesn't reach a level where it pushes their income into a taxable bracket. And once you become an employee and start making more money and you work your way up to where you are making enough money as an employee to start paying taxes, there's really not many deductions and or tax credits available to you to help you deal with that tax bill and bring it down. This is the plight of the middle class, and it's why employees and high income earners are the ones who pay the most in taxes. Now enter the rich. When you think of the rich, you might be thinking doctors, lawyers, or software developers at Facebook. These are not the rich. These are high income employees, which are precisely the people who are paying the taxes in this country. The real rich have no earned income because earned income, W-2 wages, are taxed at the highest rate of any type of income available. Instead, the rich have assets that produce passive income. The rich have assets that they borrow against because debt is tax-free. The rich also design their businesses around their lifestyle so that their businesses can pay for things instead of having to give themselves extra income, extra salary in order to pay for those things themselves. Because if you as an employee earn $100,000, you're taxed on the full $100,000, and then whatever's left over, you get to spend. A business, on the other hand, let's say it makes $100,000 in revenue, it pays for all of its expenses, and then whatever's left over, it gets taxed on. Now, if you want to design a proper tax plan for your life, read this book, Tax-Free Wealth by Tom Wheelwright. Fantastic book. I recommend it more than many books. But remember, I said there was a catch at the beginning, because officially 61% of Americans paid nothing in taxes during 2020. However, this stat only refers to federal income taxes, not all taxes. And this is key. Don't tune out here. I'm not talking about state taxes, sin taxes, sales taxes, capital gains tax. I'm not talking about anything like that. I'm talking about the biggest tax of all. That's a hidden tax that none of us get to vote for or against. This tax is inflation. And make no mistake, inflation is a tax. And I'll prove it to you. The proper definition of a tax is a centralized authority extracting purchasing power away from you. Now, normally they do this outright with a number of dollars, which obviously is taking purchasing power away from you. You make $100,000, you get taxed at a 45% rate. That means you're left over with $55,000 that you can spend. But it is possible for a centralized authority or government to take purchasing power away from you without reducing the number of dollars that you have. All they need to do is just extract some of the purchasing power from the dollar itself. That way they can leave you with the full $100,000. The result is, though, that you can't buy as much stuff as you could before with that same $100,000. That's the definition of taking purchasing power away from those dollars. Different method, same result. So how does this definition match inflation? Well, think about it like a stock split. If you've ever owned a stock that went through a stock split, let's just use for this example a 2-for-1 stock split. When this happens, a stock's number of shares doubles. So the total supply of shares doubles. So let's say you've got 1,000 shares of stock ABC. Now you have 2,000 shares. But did your wealth double? Did your wealth even change? Does a stock split make any effect whatsoever on the amount of wealth, on the market cap, on the size or the value of the company? Absolutely not. Zero difference. And that is because the price must be adjusted to compensate for all the additional shares. You had 1,000 shares before and they were at $10 a share. You got $10,000 in the stock. You now have how many shares if a 2-for-1 stock split happened? You have 2,000 shares. But what's the price per share now? $5 per share. How much is your total position in that stock worth? Still $10,000. But what if the stock were to split and they did not do an equal distribution of all of the new shares? What if they did a 2-for-1 split and all of those new shares they just gave to the executives of the company? You'd be left with the same exact 1,000 shares that you had before, but the price is still adjusted downwards. So now instead of having $10,000 in the company, you've got $5,000 in the company because the stock price dropped in half, but you still only have 1,000 shares. In an economy, money isn't wealth. Money represents shares of ownership of the wealth. Said another way, all of the money equals all of the stuff. So when they expand the supply of dollars, it's the same thing as a stock split for dollars. Except they don't equally distribute all those new dollars. Because if they did, it'd be a non-event. There would be no change, no net effect. It would be completely pointless. Nothing would happen. Instead, what they do is they give all of those new shares, those dollars, to the government so that the government can then hand them out and distribute that wealth as they please, as they see fit. For an even simpler example, let's look at a pizza. Your pizza has 8 slices, and you're planning on having 3 guests over for dinner, and so there's 4 of you, and you think, okay, 8 slices of pizza for 4 people, everybody gets 2 slices, that should be enough. But you get a surprise. You get 4 guests come over, so now there's 5 of you and still only 8 slices. What do you decide to do? How about let's slice off a little sliver of each slice of pizza and organize those into 2 new slices. So now instead of 8 slices of pizza, you have 10 slices of pizza. Do you have more pizza than you did before? Of course not. That's ludicrous. Same amount of pizza, more slices. The only reason that those new slices even have any pizza to begin with is because that pizza was taken from the previously existing slices. In the same way, the only reason that newly created dollars have any purchasing power is because that purchasing power was extracted from all of the previously existing dollars in the system. And in practice, the way that this works out is that there is now more demand chasing all of the existing wealth. The wealth in an economy is the existing stock of goods, services, stuff, assets, etc. Now, we all remember what happened last year with toilet paper. There was a surge in demand and a bunch of new money that wasn't previously trying to purchase that toilet paper started trying to purchase that toilet paper, and prices shot up as a result. And if prices don't shoot up to compensate for all the additional demand, all that new money chasing that good or that service, that means that instead you'll have a shortage. In the same way, if you increase the demand of everything in an economy by expanding the money supply and handing it out to all sorts of different areas so that that new money creates new demand and starts chasing the existing stock of goods and services, prices of everything then will be pushed up. And if prices don't go up enough to compensate for the additional demand, you result in shortages. Now back to the poor, the middle class, and the rich. Who predominantly gets hurt by a rise in prices? Well, I think it's pretty clear that it's not the rich. The rich benefit from increased revenue on the businesses that they own. They benefit from an increase in values or prices on the assets that they own. And to the extent that their expenses go up, necessary expenses are by nature a smaller percentage of total wealth or total income for the rich than they are for the middle class and the poor. Now, how about the middle class? Well, the middle class do get burned a fair amount. This is because many expenses for the middle class go up. And even if they're high income earners, it's still necessary expenses are still a significant percentage of income and wealth for many of the middle class. And these employees tend to have salaries that are slower to change, especially compared to the incomes and net worths of the rich. However, the middle class do get disproportionately benefited by inflation through mortgages because the majority of middle class have the most of their wealth tied up in their house, meaning that when asset prices rise like houses, they're inflating away the value of their debt, meaning that it makes it easier to pay off that debt because it's a fixed rate debt. And so percentage wise, since that's such a big amount of their net worth, it helps to compensate at least somewhat for all of the other pain that they're experiencing. And lastly, the poor, who are not so fortunate. The poor have no mortgages, they just have rents. They also have no assets, they just have expenses. The one thing that the poor do have going for them is that it is the most visible in terms of where government aid is handed out. And as life gets more expensive and as life gets more difficult and as the economy encounters troubles, that is the first area that receives government handouts and stimulus. And many times the poor can experience an increase in income during these hard times because of the government aid. So in this sense, understanding that inflation and money printing to hand out to different areas of the economy is a tax. And it is the most vicious because it is the most invisible and the least understood. And in this sense, the number of people who pay nothing in federal taxes is absolutely zero. Everybody pays it because inflation extracts purchasing power out of every single dollar in existence. Now, outright taxes basically only hit the middle class. They're benefited by disproportionately high fixed rate debt, but still worse off due to slowly adjusting wages. And then the poor don't have to pay that federal income tax, but they're disproportionately hurt by their cost of living going up higher percentage-wise than everybody else. And then finally, the rich benefit from the tax laws because they're using them to their advantage, so they don't have to pay those federal income taxes, and at the same time they're benefiting from the inflation because it's bidding up the prices of their assets and increasing the revenue of their businesses. And to the extent that the expenses of the rich does rise, it is a much smaller percentage of their overall net worth and their overall income, so it hurts them a lot less. So what is the moral of this story? Start a business. Act like the rich. Do what they do. Copy their habits. Don't stay poor just to avoid taxes because then you get hit hard by the inflation. Don't go middle class and try to get a good job and then try and get promotions so that you can earn more because then you get hit hardest by the taxes. Learn the tax code, read this book, I've got it linked in the description below, and start a small business to start getting the same benefits that the rich take advantage of every single day. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.